Tesla's present execution and its future mega projects are finally starting to converge. And if you're a long-term investor, this convergence could define the next 5 years of TSLA's stock trajectory. That is the core conclusion I want you to hold right from the start. This is Ken. Now, why does this matter for you as an investor or a Tesla owner? Because today's seemingly unrelated updates, an analyst downgrade, new FSD initiatives, the latest on Optimus, real-world semi-data, and Shanghai's massive production milestone actually form a single meaningful pattern. Understanding this pattern gives you a major informational advantage. It allows you to position yourself early, long before the market fully reacts. So first, let's summarize the key facts shaping today's narrative. Morgan Stanley downgraded Tesla from overweight to equal weight. Tesla opened FSD subscription gift cards to the public. Optimus fell during a live demo, an incident that sparked a wave of discussion. DHL published its real-world testing of the Tesla Semi, showcasing impressive long-range performance. Shanghai Gigafactory officially crossed the 4 million unit mark, and Tesla committed to expanding Japan's supercharger network to over 1,000 stalls by 2027. At first glance, these stories look scattered, but once we examine them together, the picture becomes much clearer. Let's start with the analyst downgrade because it sets the emotional tone for the market. On the surface, it looks bearish, but the real message underneath is far more interesting. Morgan Stanley argues that Tesla's future value, Robotaxi, FSD, and Optimus, has already been heavily priced into the stock. In other words, Tesla is being judged not by what it is today, but by what it might become. This is exactly why TSLA experiences both extreme skepticism and explosive upside. When the story pauses, the stock stalls. When the story becomes real, the stock moves violently upward. No other automaker trades on this kind of optionality. Now, the next development fits directly into this story-driven dynamic. Tesla introduced FSD gift cards, allowing anyone to purchase a 1-month subscription for someone else. It sounds simple, almost like a marketing experiment, but strategically, it is far more significant. Tesla wants more people on the road generating real driving data. Every additional mile strengthens the neural networks that power FSD, and because Tesla's core advantage comes from the scale of its fleet and the volume of its data, reducing friction to try FSD is a powerful long-term move. It accelerates the feedback loop that competing companies cannot replicate. This leads us naturally into Optimus. During a recent demo, Optimus fell backward and social media erupted with criticism. But here's where we need to slow down and think as long-term investors. Most robotics companies hide their development process. Tesla does the opposite. The fact that Optimus is being tested publicly, failures included, signals a very specific strategy: learn quickly, collect real-world reactions, push iteration cycles forward. And here is the part that many people missed. Despite the fall, the robot's movements, its hands, articulation, balance control, were noticeably smoother than in previous demos. That is the kind of incremental progress that compounds silently until one day it suddenly looks exponential. To understand how all this fits into Tesla's broader strategy, we need to look at the company through two vectors. The first is future projects, FSD, Robotaxi, and Optimus. These represent Tesla's long-term, high-margin potential. The second is present execution, manufacturing scale, commercial fleet electrification, and infrastructure growth. This is where Tesla builds financial resilience. Few companies can develop frontier AI while simultaneously scaling global manufacturing. Tesla is one of them, and the market has always struggled to price this dual identity. This brings us to the investor impact. In the short term, analyst downgrades put pressure on the stock, but the fundamentals, the actual output of the company, continue to strengthen. Shanghai crossing 4 million units is not just a milestone. It is a sign that Tesla's operational engine is maturing. More production means lower unit costs, faster iteration, and higher margins in the long run. Meanwhile, the Tesla Semi showing 390 miles of range at full load with superior energy efficiency signals a possible disruption of commercial logistics. This is a segment where regulatory pressure and cost savings align perfectly, and Tesla has an opportunity to become the default solution. Here is an unexpected insight that many investors tend to overlook. While the market debates FSD and Optimus, Tesla's expanding supercharger network is quietly shaping long-term demand. The announcement of more than 1,000 stalls in Japan by 2027 shows how Tesla is building invisible infrastructure advantages. Competitors cannot easily replicate this, and when charging becomes effortless, EV adoption accelerates dramatically. Sometimes the biggest demand catalysts are not the flashy technologies, but the subtle improvements to usability. So, where does all of this lead? In the next few years, we will likely see Tesla transition from promising future projects to the early stages of real deployment. FSD will spread through easier onboarding. Robotaxi pilots may begin regionally. Optimus will likely enter limited commercial environments. The Semi could become a standard for sustainable logistics. And Tesla's manufacturing scale will push costs down to unlock new vehicle classes. The market may not fully price this transition until it is already underway. As long-term investors, we should view Tesla through the lens of optionality. You are not betting on a single product, you are buying exposure to multiple emerging industries, any one of which could meaningfully shift Tesla's valuation. The convergence of present execution and future innovation is what gives Tesla its asymmetric upside. Moments like today, when the news flow looks scattered, often mark the early stages of a broader shift. I hope today's analysis helps you see the bigger picture behind these headlines. If you found this breakdown useful and want to stay ahead of Tesla's long-term trajectory, consider subscribing. I share daily insights designed to help investors understand not just the news, but the meaning behind the news. And I'd love to hear your thoughts in the comments. Which future engine do you believe will drive Tesla's next major growth cycle? Thank you for watching, and let's continue enjoying life with Tesla at the center of the future we are building. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.